The Central Bank of Nigeria on Wednesday, June the 14th, in a press statement, announced changes to operations in the foreign exchange market, abolishing segmentation, reintroducing the willing buyer, willing seller model at the investors and exporters INE window, as well as the use of weighted average rate of the preceding day's transaction as the operational rate for all government-related transactions. Following the press statement, the CBN held an extraordinary bankers committee meeting on Friday, June the 16th, after which additional guidance on Forex market operations were released. Now, customers needing Forex for medicals, school fees and the likes are eligible for the INE window, just as restrictions on the cash deposits into domiciliary accounts have been lifted, and ordinary domiciliary account holders have been granted unfettered access to funds in their accounts. We'll be discussing those changes in the Forex market operations with an industry expert in today's episode. After this short break, stay with us. Thanks for staying tuned. The Central Bank of Nigeria says the recent policy changes in the foreign exchange market are aimed at promoting transparency, liquidity, and price discovery in order to improve Forex supply, discourage speculation, enhance customer confidence, and ensure overall stability in the foreign exchange market. To analyze some of the changes as mentioned in our introduction in relation to the economy, we spoke with the Director, Center for the Promotion of Private Enterprise, CPPE, Dr. Muda Yusuf. Dr. Muda Yusuf, many thanks for joining us this afternoon, sir.
Thank you very much, Yemi. It's a pleasure to be with you.
All right. So it's been over a week now since the Central Bank of Nigeria announced changes to the operations in the foreign exchange market. How will you describe the current foreign exchange regime and how has the market fared so far?
The current foreign exchange regime represents the reform that we have long clamored for. Because what has taken place by way of the policy on the unification of the exchange rate was a major reform. It's a reform that would impact positively on the economy, and we are beginning to see some indications of that. First, it will impact positively on liquidity in the foreign exchange market. Because the view of some of us is that under the previous dispensation of the foreign exchange policy, it was very difficult to attract foreign exchange inflows into the economy, either through foreign direct investment, foreign portfolio investment, even export proceeds. Many of the exporters were avoiding bringing in their foreign exchange because of the fact that we were operating a fixed exchange rate regime, which was not reflecting the fundamentals of the market. So there was an acute liquidity challenge in the foreign exchange market, which led to rationing of foreign exchange, which led to a lot of transparency problems, and even some elements of corruption as well. Part of the fallout was the decision of Emirates to leave the country. And it's on record, even according to IATA, that Nigeria has the highest amount of stock funds of airlines in the whole world, over $800 million. All of these were reflection of the problem of illiquidity in the foreign exchange market. So this policy is going to enhance liquidity because it will incentivize a lot more of inflows, independent of what the CBN is bringing into the foreign exchange market. So the economy or the market will now depend less on the central bank and depend more on autonomous inflows into the foreign exchange market. So we expect more inflows from FDI, foreign direct investments, from foreign portfolio flows, from diaspora remittances, from export proceeds, from international oil companies, from even the embassies and diaspora remittances. So we expect a lot more inflows. That's on the supply side. On the demand side, because we now have a unification or a major step towards unification, demand pressure on the foreign exchange market will also reduce. Why? Because there's a huge component of demand that is driven by arbitrage, by those who want to take advantage of the premium between the parallel market and the official exchange rates. So that component of demand will fizzle out. So that will reduce the demand pressure on the foreign exchange market. So if you have an improvement on the supply side, you have a reduction in demand. Ultimately, it's only a matter of time. We see a much more stable and possibly an appreciation of the exchange rate in the INE window.
Okay. But as we speak, the parallel market still exists. And there is the opinion that with the unification of the foreign exchange segmentation now, that doesn't exist now, that there shouldn't be a parallel market again. So is that what obtains elsewhere, and is it healthy to still continue to have the parallel market or the black market, as so to say?
No, there will always be a parallel market. There will always be, some elements within the country or some citizens who just want to walk into either a bureau de change or somewhere and just pick up their foreign currency. The whole essence of a unification is to narrow the gap in exchange rates. It is not possible to have the same exchange rate across all markets. Between the official window and the parallel market window, or between the official window and the BDCs. Because between the BDCs and the parallel market, there is no significant difference. But they are still different markets. But the objective of unification is to narrow the gap. And that is the global best practice all over the world. The gap between the official window and the parallel market window, or the official window and the BDCs, should not be more than maximum between 5 to 10% differential. If you have that, we can claim that we have achieved the unification. The unification does not imply that the rates will be exactly the same, certainly not. What the policy is aiming to achieve is to narrow the gap and discourage the practice of arbitrage, moving funds from the official window to the parallel market window. That is the objective of the policy, because that practice has created a lot of distortions in the foreign exchange market.
Now, in further guidance on operational changes to the foreign exchange market by the CBN, it is stated that bank customers seeking Forex for medicals, for school fees, business travel allowance, personal travel allowance, airline and other remittances are now eligible for the INE window. What is the implication of that if this category of bank customers are now eligible for the INE window?
Well, the implication is that first, it will help the objective of unification. Because before now, apart from the BDCs and the official window, we also have some fragmentation in terms of markets, even within the official, what you can say regarded as official window, outside the INE window. There are quite a number of windows within the banking system itself, through which you can buy and sell foreign exchange. But with this development, most of those windows will have to give way, because a lot more people now have access to the INE window. So it is in furtherance of the objective of unification. And it is good for transparency, it's good for confidence, and it's good, for the stability of the market. So that is the advantage it brings. However, I think the policy also needs to create a room for the BDCs. because we not like to see a situation where every little foreign exchange demand will be going to an INE window. You know, I mean, imagine you need $1,000, $2,000. Must you be going to an INE window? No. So we should create a window for the BDCs. I'm not saying the CBN should be selling FX to BDCs, but the policy should create an accommodation for them to define their threshold, to define the limits of transactions that they can do, to define the limits of the foreign exchange that they can receive directly and also sell to the public. Just as you have in the banking system, you have the big banks, you have the medium banks, and you have the microfinance banks to take care of some retail transactions. In foreign exchange market, there are also retail transactions, which should be taken care of by the BDCs. So I expect the CBN to come up with a policy framework that will properly accommodate the BDCs in the current policy regime.
Okay. I wanted to say earlier that the CBN had tried that, I believe, and it did not work because the BDCs did not comply to the threshold that they were given. Well, let's move on from that. There are fears that since our foreign exchange earning in the country has not really improved, there are fears that the changes may not necessarily impact as much as one would expect. What do you think about that?
Well, it's too early in the day to be drawing conclusions. This policy is barely a week. It takes time for policies to mature. It takes time for the market to stabilize. What we are hoping is that because we now have a renewed confidence in the foreign exchange market, we will see an improvement in supply into that market, which will help to bring down the rates. We will see a reduction in demand because of all the economic parasites and arbitrage seekers and rent seekers that will fizzle out. That will help to bring sanity to the market. So in the fullness of time, maybe in a month or two, we see much more stability. Initially, we are likely to see some pressure on the market because we had backlog of demand for Forex, which we have not been able to meet because of the dysfunctional foreign exchange policy. So if we unleash all those backlog on the market, which is what is happening now, there will be a lot of pressure, and understandably so. But with time, as we meet all these demands, the situation will begin to stabilize, and we be getting a lot more foreign exchange from autonomous sources. That is not to say that the CBN will not also be playing the market. The CBN also still has a role to stabilize the market by buying or selling, depending on the situation in the market and depending on the capacity it has, based on its reserves to be able to intervene. That is the practice globally. The CBN has a responsibility to ensure that we minimize volatility in the foreign exchange market through intervention, not by fixing the exchange rate, but by also becoming a participant in the market, either through the supply side or through the demand side. I think we need to get that clear. So that is the whole essence of a managed float. The floating is not absolute.
Okay, so let's talk about debt servicing. With the review of the changes made to the foreign exchange market, which has seen the naira depreciate in value, how do you see this affecting debt servicing by both the state government and the federal government, as well as balance of trade?
Well, with regard to debt servicing, let me also make this point. The new foreign exchange policy regime is going to improve government revenue. I expect government revenue to improve by between 3 to 4 trillion naira additional which will go into the federation account. So that will, and once revenue goes into the federation account, all the tiers of government benefits. So if there is a positive impact on the revenue of all the tiers of government, their capacity to manage their debt will increase. The need for them to be borrowing will also be less. So it has a positive impact because it's going to impact positively on revenue. With respect to foreign debt is serviced from our reserves. The government has a dollar foreign currency account and a domestic currency account. When we receive foreign exchange as income or receipts into the economy, it goes into the foreign currency accounts, or better still, even the reserves of the federal government. If there is a need to incur expenses in terms of servicing debt, it is done from the reserves of government. So in practice or in reality, it doesn't have much effect, because the dollar receipts is what will be used to service the external debt in dollars. The government does not need to go to the foreign exchange market to go and be exchanging naira for dollar to be able to service foreign debt. That is done essentially from the foreign reserves of the country.
You've talked about the changes helping to improve foreign direct investment. But let's look at savings and investments locally. Because Nigeria is still largely import dependent.
Because of the...
So there are worries that the purchasing power of citizens in the country may reduce. How do we juxtapose all these factors?
Well, generally inflation is a problem in Nigeria, just as it is a problem in many other parts of the world. So that is why it is important for the government to take some extraordinary measures, to reduce the cost of living. The government is already talking about wage review. Government is also talking about quite a number of measures to reduce the pressure on the citizens. And, from my own perspective, I think we should do a lot more with regard to fiscal policy, using fiscal policy measures to alleviate the sufferings of the people. And what I mean by that is that we should be reducing taxes on payee for those who are workers, not just only in the public sector, but also in the private sector. I mean, anybody earning 200,000 naira and below, for instance, should not be paying taxes as part of the reliefs. Then some critical producers of food, government should deploy fiscal policy measures to reduce their cost of production. This could involve reducing the tariffs on their intermediate products, reducing their levies and taxes and charges at the port, so that the cost of production of food can be much less. If the cost of production of food is less, we expect that this will ultimately translate to reduction in the cost of food. We should do the same for energy. We should have more players in the energy sector so that there will be competition among them, and that will help to protect the consumers. So it has to be a cocktail of policies, or a combination policies, not just only salary, because what percentage of Nigerians are working with government, So we have a much larger percentage outside the public service who are also seriously affected by some of these policies. So the whole idea of palliatives has to be a lot more comprehensive, and it has to be a lot more inclusive.
Well, Al, there is this common practice. At a point, Nigerians were almost dollarizing the economy because many citizens use naira to buy dollar, and they just keep it because they believe it's a better store of value. And our appetite for foreign goods continue to rise from top to bottom. If this scenario continues, if the situation continues, what is the fate of the naira?
No, you see, under the current policy environment, the exchange rate benefits from the fundamentals of supply and demand. If you create a policy environment that allows for more supply of foreign currency into your economy, a policy environment that allows for more inflow of foreign capital into your economy, it will benefit the currency. That is what this policy is meant to achieve. You don't have a policy that blocks inflow of capital and expect your currency to be strong. You need to create the environment for more capital to flow into your economy. That is what all this liberalization is all about. So contrary to what you said, I think this is positive for the strength of the currency. And the way to grow the currency is to ensure that you have more people bringing in money into the economy. It's also to ensure that you rely less on imports. That is the way to strengthen the currency and to also benefit the economy and create more jobs. So rather than have people go to the foreign exchange market and all they do is round tripping. That is, they go there, get the FX at 461, go and sell it at 700. That is all the business many of them were doing before the advent of this policy, this unification policy. So now that you have taken away that, we are likely to see a lot more productive people, real entrepreneurs, coming into the market, make demands because they have serious business to do. So I think for me, it is positive for the economy. I would say Nigerians have penchant for foreign goods. Well, I don't fully agree with you because right now it's even more expensive to buy some of these foreign goods. Right now, there are a lot of locally produced products that Nigerians admire a great deal. There are many Nigerians who cannot eat foreign food, except Nigerian food. There are many Nigerians who don't listen to foreign music. There are many Nigerians who don't wear foreign clothes. What they wear is their native Nigerian dresses. You know, I agree with you. Maybe we are not there yet in terms of sophisticated technology and all of that, but a lot of things are consumed in Nigeria. Almost 90% of the food we eat in Nigeria are Nigerian foods. So our foreign dependence is not as bad. The only area where we had issues is importation of petroleum products. And now with the ongoing reforms, that again will be out of the way. So that we rely less on petroleum products and we're able to save over $10 billion annually that we spend on the importation of petroleum products. That has significant effects, positive impact on the economy. So that is the pathway and that is the trajectory that we see at the moment.
All right, the changes are just a little above a week old, so it's something that we'll continue to watch and then review and analyze further. So we'll leave it there for now. It's always a pleasure speaking with you, sir. Thank you for coming on the program.
Yeah, thank you, Yamisi. Thank you.
That's the package from the CBN this week. Be careful not to fall for any fraudulent recruitment portal or loan scheme advertisement purportedly from the Central Bank of Nigeria. Get your information from trusted sources always. Report unresolved banking issues to the CBN Consumer Protection Department using the email cpd@cbn.gov.ng. Attach relevant documents. Call the CBN Contact Center on the phone line +234 700 2255 226. Local call rates may apply. Write to us through the email from the cbn@gmail.com. Follow us on Facebook, YouTube, Instagram, and Twitter for updates and to watch uploaded episodes of the program. We invite you to join us again next time. I am Oluyemi Dada. Stay safe and bye for now.